Guys, in this video I'm going to take you through how to use the volume indicator in forex trading. So once you open your chart, okay, and you need a certain indicator that can help you to know how authentic the move is going to be, then the volume indicator is one of the best indicators that you can use to determine whether the move, either to the upside or to the downside, is valid and is reliable. So we use the volume indicator to determine the amount of traders that are supporting a specific move on the market at a specific time. So when you check the chart, okay, this is the chart. This is Bitcoin US dollars and then time frame of 30 minutes time frame. So this is the volume indicator. First of all, if you want to know how to add the volume indicator to the charts, let me take you through that. So you click on indicators. So you click on indicators. Then you click on volume. Then the volume will be added to the chart. Now, we use the volume to determine how reliable a certain move on the market is. Okay, so when you check this particular chart, for example, we have currently, we can see that the market is moving to the downside. Okay, and how do we know that this particular down movement is valid or is reliable? You check the volume. You check the volume indicator. So the volume indicator, first of all, you use it in addition with your price action, okay, to determine how authentic the move is going to be. And it's used to determine the number of participants, the number of traders, or the number of buyers or sellers that are supporting a specific move. So the higher the volume indicator, the higher the participants are supporting that particular move. The smaller it is or the lower it is, the lower participants support the move. So in this particular case, if you look at this particular area, previously the market was moving in an uptrend. Okay, it started pushing from this area and then it hit this particular zone. And when you check the left side in this area, you could see that this area currently where the market is a supply area, and there is high probability of the market to reverse at that particular area. That is why we are seeing a down movement. Now, how do we know that the market will indeed reverse to the downside at that particular zone? The fact that that area, the market sell at that particular zone previously, does not mean that in the future it's automatic that the market will have to reverse or will have to sell at that side. So it depends on what you see over there. Okay, all right, so when the market hit this particular area, we could see that we saw a volume indicator, okay, a red volume indicator, which is this particular one. So this red volume indicator is an indication that the markets, okay, the market at this particular point is probably going to reverse. But if you want to know that it's very authentic, then you check the height of the volume, and you know that the height of the volume is directly proportional to the number of participants that are supporting that particular mode. So for example, if you have a particular candlestick that 100 people are trading to support that particular movement, So as far as this one is concerned, if let me say we have 100 people selling the market at this particular point, and then we have another one that's there are only 50 people that are supporting that movement, then it means that those that are the 100 people will are rather stronger on the market. Okay, so you check the height of the volume indicator. So for a first one, the market is at the supply area, and then we saw a red we saw a red what candlestick formed and closed, and then we also saw a, a volume indicator that is spiking to the upside. Now the next one also came. Look at the candlestick, the middle one, the red middle one also came, which is very small. It has a very small body, and we all know that when a candlestick has a very small body, then it means that there are not a lot. I mean, the people that are supporting that or that are trading on that particular time are very small. But if you check the candlestick, even though it has a very small body, but then you check the volume and there is a spike of the volume, so you realize that this particular volume is larger than the previous one, even though the previous candlestick, which is bearish candlesticks, it has a bigger body than the middle one. Okay, and then the middle one too has a very small body, but it has a huge volume, which is an indication that there are a lot of people that are supporting that particular down movement. And that is why after the close of that particular candlesticks, which is bearish candlesticks, we will have to look out for it. So we immediately have to sell, because we saw from the volume that there are a lot of participants on the market trying to push the market to the downside. And so at least in the next 30 minutes, the market is going to be bearish. That is why this particular volume indicator spikes. Okay, it became bigger, and indeed the market moves to the downside. So the volume indicator helps you to know the number of participants on the market at that particular time. Okay, so the higher the participants that are supporting that particular move, the more authentic the move becomes, and it becomes reliable to trade. If for example, after this small candlestick formed in the middle, this red candlestick which is in the middle, if after it formed and then we saw a reduction in the volume, we realized that the volume rather shrinks, it became small, then we know that the participants are not supporting that move, and there is high probability of the next 30 minutes for the market to push to the upside. So when we check the volume indicator, as it increases in height, it's telling you that there are lots of participants supporting that particular move, and so the market will push to the downside. Okay, so we have another example here that we can also talk about. So when you look at this area, okay, when you look at this area, initially we saw a huge bearish engulfing candle formed with a very large volume, which indicates that there are a lot of sellers on the market. But what happened? The next candlestick that was formed was a bullish candle, and then we saw another candlestick which was another bullish candle. Okay, and then the next bullish candle formed is higher or is bigger than the previous candlestick. So that is telling you that there are a lot of participants supporting that particular move, and so the market will push to the upside. And that is why we saw